Hi again. Happy New Year to all of you. I'm Giovanni Betancourt, and this is the market analysis for today, January the 9th. I'm an educator, analyst, and trader with Vantage Markets. So let's get with it. Fed wants weaker markets, investors want a bargain, and we need to brace for earnings season. Now, it is the second week of trading for the year, and it's time for things to really get going. Earnings season is beginning, and we are getting some critical data from for the Federal Reserve. Expectations for companies are low. Analysts see the first annual quarterly earnings decline since the pandemic struck in 2020. Some companies that will be reported on Friday are like Delta Airlines and some of the big banks also. Companies themselves are bracing for a downturn. Goldman Sachs, for example, is reportedly going to start cutting thousands of jobs this week. Technology companies have been paring back staff for months now. Now, in minutes published last week, the Fed recognized that the pain of last year's aggressive interest rate increase is going to be felt in the coming months. The manufacturing sector looks like it's shrinking. Job growth is moderating and wage gains are slowing. But Fed Chairman Jerome Powell and his colleagues are also worried that slowing the pace of tightening will send the wrong signal, more or less explaining that the rate hikes will get smaller as long as markets don't rise in response. That's a key. Now, Fed policymakers will be given more to think about this week. Inflation is expected to have cooled further in data due out Thursday, and jobless claims are expected to have ticked up. If either one of these things happens, let's say, for example, that the data on Thursday didn't cool off, and that jobless claims didn't tick up, actually went down, and the CPI went up, then we are going to be seeing perhaps that expectation of the market falling. Now, if we see something of more in line with what the Fed wants to see, then the other part will come in that the Fed doesn't want the markets to rally in response. So what could happen? What could happen? You see, Fed policymakers will be given more to think about this week. Inflation is expected to have cooled down, but the bigger issue is that the tricks stand up with stock traders. For investors, the big question is whether last year's slump will continue. In which case, it's better to say on the side to stay on the sidelines, or if most of the bad news is priced in, it could be time to buy. Now, the S&P 500 may not have seen a rally in December, but it is up this month. And some analysts are seeing that by the second quarter, we could probably see the S&P around the 4,200, 4,300 level. Now, markets may just try to fight the Fed. And with that, I'll say good luck. So let's take a look at what we can expect, or what we're seeing now that the market has already opened. All right. So in technical analysis, there is one way for us to uh, pinpoint, or for us to forecast, to speculate, because that's really our job. We're speculators, okay? Nobody's here is an institutional broker. We are all speculators, okay? So as speculators, technical analysis tells us that if all four indices, NASDAQ, S&P, Dow Jones, and the Russell 2000 are in sync, meaning that they are pointing to the same way, then that is that obviously we're going to be having for the week a positive week, which in the case, if they're all pointing higher, then we're going to have to see a positive week. As the same token goes, or to back that up, they're saying that if, for example, on the Friday we close higher and on Monday we open higher, then we're saying that the momentum is continuing. So we see that happening here in the Nasdaq. We see that on Friday we close higher, we're positive, and today we have opened higher and pushing higher. So I found it redundant, but anyhow. So I have my 11,500 as my support, which previously last year we saw that as a support level. Now it has turned to a resistance. So if we happen to do trade above 11,500 before the CPI on Thursday, then if that number, let's say for example, it comes out at 6.5, something, a better, a better number than expected, or a better number, then we will see a rally to the upside, a continuation of that rally, 12 towards 12,000, for example. But the Fed doesn't want that. The Fed doesn't want, the markets to continue to move higher. So let's take a pause and think why that will be. We've been hearing about inflation, and that one of the major key components to inflation was, or it continued to be, a high price of crude oil. But at the same given token, corporate earnings also cause inflation. The higher earnings, corporate earnings are, obviously, who has to pay for that? The consumer. So if market rallies, okay, things go higher, then that will be just feeding the beast. Okay, inflation will continue to be higher. So that's why the Fed doesn't want the market to rally to move higher. So if we get a CPI number cooler than expected, or cooler, then if the market wants to listen to what Mr. Powell says and not rally, then where we are around on that day, let's say for example that we are around 11,500, then we could probably see a sell-off. All right, in expectation of last year, if that was within, let's say at the beginning of the year, of good numbers, they rally the market rally. Now the Fed actually wants the opposite, so keep that in mind. So this is Nasdaq, all right? The RSI is way, is far from being overbought. It's actually above the 50 level, which is pointing that it started to do a positive, or an upward momentum, okay, towards perhaps 12,000. So that's the key. Then we have the S&P 500. Also, we closed on Friday positive. We opened higher today, and we're moving higher. 4,000 is that psychological round number that we could probably see. Our size is above 50, so that's on showing a momentum to the upside. Then we have the Dow. Dow closed on Friday positive. We open higher positive today. We open higher today. I have 34,500 as my resistance. RSI is above 50, so it's showing us that upward momentum. Then we have the Russell 2000, again also closed on higher on Friday, or open higher today. Okay, so the RSI is also pointing towards a higher movement. So I have 1830 real close to where the market is at, but this is just my resistance. The market could probably just rally and break that resistance, and come to 1850, for example. But on all indices, we are on an upward momentum. Okay, then we have crude oil. This white line, this broken down white line, that's the level where the year began last year in January. That's where the market began, and that's when it started rallying. So if the dollar index continues to move lower, then we're gonna most likely continue to see a rally in crude oil and other commodities. So I'm positive on crude oil, obviously, due to the fact that China has opened up. Okay, they open up their borders, so their economy is back online. Yes, that Russia is the main supplier for the Chinese crude oil, but China is a big force. We can't, we have to understand that they're coming out, and they are hungry, and so we most likely are gonna see that big consumption. Their demand is going to be incrementing, and most likely we'll see crude oil rally above 78 back to 80. Most likely that that will happen. The United States can't continue to flood the market with the SPR, with the special term reserves. They need it, so most likely they're not gonna continue to do that. They haven't. They're not continue to doing that. I should say that. So being positive, being look to buy crude oil on some dips. Right now, you could buy it, and if we continue to momentum as history recalls it, no closing above this $76, we'll show those that momentum to the upside. So $80 is what we're seeing it. Nat Gas, after being in a consolidation stage for a couple of weeks, it has finally broken out of it to the downside. It found some support right at 350. It has bounced off that support, moved to the upside. I'm looking for Nat Gas to see. I'm thinking, and I'm looking at it, and I believe Nat Gas. I think Nat Gas will most likely be in a tight range. They're just trading inside this channel created by resistance and support. So anything above our resistance, and we'll contemplate a recovery back up to $5, which was previously a psychological support level that has finally been broken. So we still have a lot of room for the upside. Now we'll continue to move to the downside. There's more discussion towards the upside than the downside. Okay, or at least to stay idling in this channel between 350 and 425. Then we have gold. All right, so gold is one of those markets that people flock to. So on Friday, all right, so we have a nice move to the upside on Friday. We have opened up with a gap to the upside on gold. 1900 is the psychological resistance, but 1850 is where I have my support. For me, 1850, when market has traded above it, how has closed above it, it has been a pretty good support level, psychological support level. A lot of traders have used this level for support. So let's see if that will hold. But for now, as far as as crude as the dollar index continues to fall, if we see the dollar index to fall towards that 101 to that 100 level, that's key. And that all of that movement will most likely bring gold above my resistance of 1920. But for now, I'm looking at gold to come down and reach 1900, find that resistance around here, and see if it'll retrace, if it'll pull back a couple of pips, and then make another attempt at trading above 1900 or closing above 1900. So this is silver. Silver is the same token. It opened up on to the upside. It has come down to close that gap. Now silver, most likely, I'm looking at silver to see if it'll find that support. It'll see if it come down to my support level and find support and make another attempt at 2450. This is copper. Copper. I spoke about copper last year a whole lot. I was looking for copper to be positive, to move to the upside. It has done so. Now, let's see if copper continues to move to the upside. If it's trading above $4, let's see if it'll stay around above $4, if it'll close above $4, if it'll come in and find some resistance at 410. But the RSI is almost coming into being overbought, and that space between 4 and 410, that would be the space where more likely the RSI will be trading in the overbought territory. So that 410 will probably act as that resistance. Some sellers might be up here looking to cash in as well, not leave too much money on the table. Then we have wheat. Now I'm going to talk about wheat since wheat and soybeans in the first quarter of the year, there's a lot of volatility. There's a lot of demand up for it, obviously. So wheat right now is in a ranging, lateral consolidation movement. It'll be a breakout. This is a setup for a breakout. What the breakout is, the contemplation of the breakout is to the upside. Okay, most likely to the upside and to the downside. So analyze this very well. There's a lot of demand for wheat. Okay, there's a glut of wheat. Remember that Russia is one of the biggest exporters of wheat. Okay, and since then they can't. Nobody's going to be buying their wheat because of the war, so the demand is going to be fulfilled some other place. Brazil is a great exporter of wheat as well as soybeans. So that what happened with the weekend in Brazil, that could be spill over the market somehow. So keep an eye on that on wheat to the upside, as well as soybeans. Soybeans are also a commodity to be traded at the beginning of the year for the first quarter. Right, so look for opportunities for wheat and soybeans to the upside. Okay, as far as the currencies goes, I'm having 108. I'm looking at 110 reality to be my the place where the euro will find biggest support. But 108 is a psychological round number that we first need to come to it and break and not trade above, not close above it, for us to confirm that upward momentum towards the 110. The pound, okay, pound, I have 124 as my resistance. Pound, the same token. As long as the dollar index continues to move to the downside, we'll see that movement to the upside in the currencies. Since the dollar index is trading below 103 and in 102 areas, I have that 100 as my support. 103, 500 is my resistance. 102 is where obviously I'll come and I'm looking forward to find that support at 102 and see if it'll break and then just continue to trade into the downside. Well, that is it for me today. I wish you a fantastic trading day and I'll see you tomorrow.